All right, just give it a second for everyone to join. Yeah, as Ross mentioned, if we can mute our mic when we're not talking, guys, that'd be amazing. Just because we are recording this, and it's nice to keep it nice and clear. Looks like we've got a few people in here, so I guess we can kick it off with some intros. I believe we have Jay Bhavnani from Rari here. Jay, are you here?
Yeah. Hey,
Hi, welcome. How's it going, man?
going well. How are you?
Yeah, doing great. Really excited to dive into what you guys are doing and how we can work together on this call. There's a lot to dive into. So yeah, welcome.
Thank you.
Uh, so, uh, Ross, Tom, are we good on the recording? Okay, amazing. Welcome everyone to the community call. Just give a couple of announcements, but we are joined today with Jay from Rari Capital, yield aggregating, and it's very exciting to dive into that in a second. We're going to go deep into Q&A in just a second. But before that, a couple of announcements. There is a awesome poke to get today. You might have seen it teased on Twitter. Uh, Anyone who's on the call will get the password at the end, and you can just send that to the bot that's in general there, and you will get a beautiful poke for your collection. So we're going to have some special announcements today around Synths, so the upcoming platform launching with uPUNKS. So we're going to have some info about that launch and about testing around that. And we also have some updates around the Museum of Fine Yams, Metaverse Gallery, everything going on in the NFT space, and what's coming up next. So loads to dive into today. And yeah, I'm gonna hand over to Jay, and yeah, I would love to let you introduce yourself, introduce Rari, and take it from there.
Awesome. Thank you. I guess I can start with the background about myself, then we can dive into Rari Capital itself. So I got into crypto like many others in 2017. Luckily, I was at the start, built out a mobile wallet that made it easy to buy and sell cryptos, ended up being acquired by my crypto, where I stuck around really leading a charge in DeFi, right? When it was still such a nascent industry. And one of the things that we saw was it wasn't easy to earn yield. So I ended up leaving my crypto to start Rari Capital, and the vision was always how do we enable the most amount of people to earn the most amount of yield. So that's what Rari Capital set out to do. And our first product was a centralized software that you'd run on your computer, and it would just rebalance between DOI, DX, and Compound. Then that evolved into a smart contract solution, which we launched in July of 2020. And what that had was a $350 deposit limit, which is really funny because now that's how much it costs in gas to deposit. And what it would do is it would rebalance between all of the various lending providers. And as time went on, we did our liquidity mining in October, where we distributed 87.5% of the token in like a true, what we wanted to do as a fair launch, but obviously keeping a small portion for the team. And then things evolved. And what we realized is a yield aggregator has a lot of difficulty because it's this middle piece of the stack, right? You're constantly getting money in from MetaMask and these other places, goes into the yield aggregator deploys it elsewhere. But being in the middle of the stack, it's always hard to assert value and to extract value, especially in pursuit of building a growing and fledgling business. So what we decided to do after the liquidity mining was finished is we said we want to control the entire stack from top to bottom. And that's where you can see a lot of our new products coming in. So the most popular one now, which I'm most excited about, is Fuse. And what Fuse enables anybody to do is start their own lending and borrowing pool. So here up on the screen, you can see some of the most popular ones that are out there. For example, last night we literally just spun up Yearn's soup pot of yield. And it took like 3 minutes to just create a pool with all of the Yearn assets to be able to easily lend and borrow. And we can do this for any assets. And the pool creator can set interest rate curves, oracles. They can really have complete flexibility. So what we're working on right now is updating the Rari risk score. So that way we can produce a good risk score to pass on to users so they're aware of all of the intrinsic risks in entering into each of these pools. And then once that risk score is done, what we're going to do is we're going to open up permissionless pool creation. What that means is that anybody can potentially come along and start their own lending and borrowing pool without having to go and ask to be whitelisted to create a pool by the DAO as it currently functions. Already, there are so many unique things that I've seen here, like pooled together's deposit tokens. You can leverage up on your chances of winning within pooled together. Like, I just think that's so cool. In Chainlink and Tetranode's pool, we can lever up on your locked up curve and stuff like that. There's really a bunch of different possibilities that I'm really excited about. And even for the Yams community, there's a bunch of potential things that we can work on together. For example, the synths. We should create a synth market, right? For everything that you guys have, it should be managed by the YAM token holders because we don't need to administrate the pools. It's all up to whoever creates them, and I think it would just be like a really cool concept is to have YAM do it. You guys can also have another one for your treasury, just be deploying your treasury assets into there, and I think that would just be really awesome. Um, Now looking forward into the future of Rari, I guess we can dive into this a little bit. As I said, we are aiming to control the entire stack really. So we have the middle piece and then the bottom piece. So now we need the upper piece and everything in between. So the next product that you'll most likely be seeing is this product called Nova. And what Nova does is it enables anybody to interact with layer 1 from a layer 2 optimistic environment. So what that means is usually if you had pushed your money into Optimism, your money would be locked there for 7 days until you can actually withdraw it. And that means that if you want to go interact with Uniswap on layer 1, you have to wait 7 days to go and make that trade. Whereas the product that we're working on right now actually enables people to go and make that trade on Uniswap while keeping their money on layer 2 and having a generalized executor go and really make that trade possible. Realistically, Nova is a developer tool. Like we'll be working with Sushi, Uniswap. The project was actually seeded by Uniswap. You can expect integrations for Alchemix, Compound, et cetera, et cetera. And it's going to be really, really cool. Some of the other things that we're working on right now include plugins for Fuse, which enables idle capital to be deployed elsewhere. So that means like when you're starting up a pool, usually it's hard to bring in interest because that's lost opportunity cost for users. But now you can instantly be deploying all that idle capital that may not be being borrowed into a yield aggregator or into another Fuse pool, which I think is going to be pretty cool. And then beyond that, we have a bunch of other things we're working on. So, I mean, I'm really excited. I mean, I'm happy to answer questions, or if there's anything that you guys just wanted to dive into a little bit more, I'm happy to go into that.
Well, amazing. There's so much to dive into there. And the Nova stuff is completely new to me. But yeah, I guess just ask a more general question. Like I know Rari's all about maximizing yield, but as I understand it, you guys also really play a lot of focus on sustainable yield and looking at the long term and things that are a bit more sustainable. Can you talk a bit more about that and how you guys are achieving that and why that's important?
Yeah, 100%. So, if you look at how our yield aggregator functions, the majority of the capital in the yield aggregator is now just being deployed into Fuse pools. And Fuse pools are being created by natural borrow demand. So sure, there is this thesis that the natural borrow demand is coming from yield farming, blah, 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 blah. But the core principle here is the yield aggregators' yields are not reliant on direct yield farming incentives. We're not going and dumping any of these tokens. We're not waiting and monitoring when the liquidity initiatives start and even slow down. All we're doing is just monitoring fuse pools and watching the interest rates go up and down in various pools and rebalancing between these. So another thing that we will start working on, we're actually starting this next week, is doing a complete rewrite of our yield aggregator to just be focused around this idea of fuse pools because that's really all that our current one does. So we've said we might as well cut it down, simplify it, make it super easy. And then the other big feature that we're going to add there is we can create a yield aggregator for any asset. So let's say your YAMS is going to be in 3 different pools, for example. We can just spin off a yield aggregator for the YAM asset that'll automatically rebalance YAM between 3 different pools, which I think is going to be pretty sick.
That's amazing. Yeah, we're really excited to see that. I'll open it up. Anyone want to ask any questions to Jay?
I have a question. You guys have alluded to this other project that you guys were working on called Tanks. I assume they were like generalized vaults, but there wasn't much information. Could you go into them?
Yeah, for sure. So they actually just begun their third audit because we've done so many rewrites for it, just because we keep on finding like big improvements that we can make to the project holistically. But essentially what tanks are is it enables you to deposit whatever asset you want into the tank and then go and do something else, right? So I find the best way to explain tanks through an example. So let's say you want to go farm sushi rewards, for example, and you're sitting on Bitcoin. What a tank enables you to do is you can lend your Bitcoin and borrow whatever is needed to go farm sushi rewards, and what the tank will do is it'll automatically maintain the collateral ratio so that it's kind of like automatic farming for you. You're keeping exposure in whatever asset you have, and it's monitoring for whenever the interest rates fall so that to make sure that you don't lose money. Um, these tanks will most likely ship in July. That's what we're shooting for, assuming that the quant stamp audit goes well. But I'll be tweeting more about tanks because I'm really excited about them, and we actually just finished the UI for them.
Awesome, thank you.
I guess I got a follow up on that one, Jai. So it's clear that Rari's got a whole load of projects on at the moment, and it's super exciting. But I'm just wondering how the team actually kind of allocates themselves across so many projects at one time. I'm interested just to hear, the methodology you guys are using to just keep on track with all that going on.
Yeah, that's a great question. So there's a few different things that we really think about. The first is active development time versus passive development time. So I think that there's a lot of work that needs to be done on these DeFi projects that is pretty passive, meaning you want to go through your code every month at a minimum for a project that is live to see if your new learnings can find any security vulnerabilities in code that you have already written. And we do peer reviews once a month for stuff like that. But going into more depth about your question specifically, how I think about it is if we're building these products and if we're building them correctly in a decentralized, in a trustless manner, what we're aiming for is zero upgradability and honestly zero maintenance besides for those security checks, right? We push out code and that code is out in the world and the code is running and the code is going to be there for as long as the Ethereum network is up. And that's the world that we're really trying to build for. So when I think about maintaining these projects, a lot of these projects we create them and then they sit there, right? And it's all about what we do and what we can build on top of them that will actually realize their visions and actually realize their potential. So when I think about Fuse, like Fuse has been done as a product for months now. But what we're doing now is we're adding all of these things on top of it to bring in natural borrower demand, to bring in natural demand across the board to further realize its vision. So realistically, that isn't a lot of development time beyond just the stuff that's built on top of these core products.
Yeah, thanks. I think you answered that really well. The whole idea of having zero kind of upgradability and zero maintenance that's a really smart strategy. I think that's really cool.
For
I
sure.
do have
I think that really quick. I think that like a lot of projects see it as like a bug, right? Like zero upgradability. Like they try and find their way around it. They try and find their way into doing like centralized voting schemes and like snapshot and shit like that, right? But the projects that are actually emphasizing on-chain governance and embracing it and embracing zero upgradability and actually embracing decentralization, I think those projects have a unique advantage in being able to do things like this.
It's a refreshing approach, definitely, because I mean, there's probably so much time on other protocols people spend on maintenance and those kind of things. So that really is quite novel. I do have a second question here, is because obviously a lot of the other Fuse-like lending markets, they obviously have different risk tolerances, and there's obviously Oracle attacks that have happened in the past quite frequently. So I'm interested to know how Rari kind of it mitigates, I don't know, misusing oracles and those kind of abuses, or is it just from the risk scoring? I'm just interested in how you guys think about the risky oracle side of things.
Yeah, that's a really great question. There's a few things we've thought about here. I think that what our true vision with the Fuse product is not for us to play this like overarching like like power keeper or power broker essentially. Like we want to empower each user of the platform as much as possible. So for that reason, we enable the pool creators to choose whatever oracles they want. They can choose Chainlink oracles, they can use Uniswap TWAPs, they can use literally anything that they want. And it's super easy to switch oracles. But going back to the question about, yes, these oracles are intrinsically risky and some are much riskier than others. What we do is we highlight that in the pool risk score, as you mentioned. What we also do is we try and do as much cleanup on the oracles in the background as possible, meaning that like if a Uniswap TWAP is reporting some like crazy numbers, we have some stuff that will automatically try and fine tune it just so that it's not as crazy as it would be and hopefully protects the users of the platform a little bit better.
Thanks. Yeah, that makes total sense. I'll leave the floor open for anyone else who wants to ask questions because I still have some more, but I don't want to steal the show.
I have another question. I really like your guys' approach for doing like a complete vertical integration of the stack. The only other project that I see trying to do this is Sushi. Could you talk on like the differences of your guys' approach? I mean, are you guys looking at AMMs at all too? Are you trying to get into that space or at all or anything like that? Are you trying to remain agnostic or what?
Yeah, that's a great question. I don't think we will be getting into the AMM space. At least it's not on my personal roadmap. Obviously, somebody in the DAO wants to do that. I'm always down to do cool shit. But how I think about our approach versus Sushi's is a lot more fragmented. So yes, they are going on different parts of the vertical, but if you think about it, how does Kashi actually help the core Sushi products? How are they all helping each other? They aren't, right? They seem to be pretty isolated products. Whereas in our lineup, I think that it makes a lot more sense to go after this vertical integration only because the products are boosting each other and helping each other. The yield aggregators allocating capital into Fuse. Fuse will use Nova to divert capital into different layer 2 environments. There's all these products that are going to be building on top of each other instead of having this isolated stack.
Very cool. I like the synergies a lot. I have one more question.
Yeah, go.
You guys were unfortunately the victim of like a pretty big hack. I was following you guys as you guys were handling, and I thought you did really well. But I wanted to ask, like, what are the lessons you learned, and like, what kinds of thing would you take away from that, and probably like for projects like us, like, what would you recommend? You know.
Yeah, there are a few different things. Um, First of all, everybody always likes to talk about composability, and composability is great in many aspects. But as seen by the hack, composability is also a bitch. Um, there are many things that you can't know about the projects that you're working with. For example, speaking of the exact alpha Homara exploit that happened with us, the code that was exploited was actually closed source. We had never seen the code that had been exploited. We don't know how somebody could get that code, but it had been closed source and we literally couldn't, like, we didn't know about it. Which, sure, that may have been our fault to a certain degree, not doing the proper research, not knowing about it. That being said, what we learned from this was a fewfold. The first is when dealing with composability, you need to do it in a very, very calculated manner. You want to embrace the projects that you're working with without giving them too much power, right? You have to limit them. So how we're thinking about the yield aggregator now specifically, and I touched on this a little bit earlier, is the yield aggregator is most likely going to like wind down deploying capital into other projects and just deploy capital into Fuse. And you may be asking, okay, how does Fuse reach parity with these other rates that the other projects are providing, right? Like how can we stay competitive when we're just having Fuse be the core yield providing service? And that's where plugins come in our ability to basically divert unused capital into other projects. And we're going to have a very, very strict framework for how plugins work to make sure that an exploit does not happen like it happened before. And then the second thing, and the more interesting thing in my opinion, is insurance. Right? Insurance is completely broken in DeFi, right? You guys are working on a project here. Everybody's working on a project in insurance. I think nobody's cracked the formula yet, right? Nexus definitely hasn't, Cover definitely hasn't. I'm really just waiting for somebody who has, and in the meantime, we have to work with the solutions that are out. So we're working with Nexus, we're working with Cover, we're working with all the other insurance solutions, not only on how users can easily buy insurance, like through our interface, right? When they deposit, why not have a pop-up that says, would you like to insure your deposit? But then secondly, how can we, as a protocol, insure all of our users? How can the protocol hedge against the risk of a potential downturn? And these are all things that we're exploring pretty early on. What we are also doing is we're doing a complete UX UI overhaul of the entire dashboard. So in that new dashboard, you can expect a complete built-in insurance solution. Still debating if we're going to use Nexus or Cover, or even offer both of them in the interface.
I think another just kind of cool point to mention is when Indigo was talking about sushi and integrations there on their end versus Rari. I know that on Kashi, it's they're using flash loans in the platform, so you can go short quite easily and capital efficient. And I'm looking at Fuse, and I think that seems like an obvious integration to put in, because obviously it's not a lot of work, but you could get good capital efficiency going short. All these long tail tokens are going to start arriving on Fuse. So I wanted to know if that's on the roadmap to kind of add.
I 100% agree with you, right? What we actually did about 3 weeks ago is the DAO seeded a grant for somebody to build an interface that is dedicated to margin and leverage on top of the Fuse platform. Pulls in Fuse liquidity, does the flash loans, make it so that in one transaction, you can instantly go up to, I think, 2.5x short or long any of the assets within Fuse. And that interface just finished, I think, like 2 days ago. So right now they're just putting the final touches on it. You can probably expect it out early next week or the week after. And then we're going to do an audit in July for it. But yes, we're going to have a really easy to use margin interface, and we're going to support a hell of a lot more tokens than Kashi.
Oh, music to my ears. Very glad to hear that. And I thought you were going to say it's 2-3 months out or something like that. But yeah, that sounds great. I think I'll end with I got one more question for you, or yeah, just something that you could expand on. So I read something some time ago that you, with the exploits, the Rari team decided to kind of issue bonds. And I'm not sure if this is the first DAO issued bond, but it just seemed like an innovative way to kind of repay those users from the hack. And just interested to hear you expand on those bonds and how they work, and maybe just some expansion on them.
Yeah, I'm really excited about the bonds. I agree that I think we are the first DAO to like formally call them bonds. I think other people have created bond-like products without calling them bonds. And I don't even know if we'll end up calling them bonds when we put out the product, because bonds are bonds are a gray area. But in terms of the bond product itself and how it works, we're working with the Yield protocol. They specialize in fixed loans to create a zero coupon bond. And what the zero coupon bond means is we have until the maturity date to pay off this bond, though we could pay and set aside the capital to pay off the bond earlier than maturity. The cool thing is these bonds can be traded in this AMM, which is specialized for bond trading, called the yield space, where users can easily offload or onload bonds. And in conversation with many users, we've seen two different type of customers for this yield space. There are the people who are impacted, who want to sell their bonds at capital. And on the other side, we've actually, surprisingly to me, maybe as a degen, surprisingly to me, we've seen a lot of interest in people actually buying these bonds and buying the ability for us to deliver these returns into these bonds, right? So people want to buy them at 80 cents on the dollar, at 60 cents on a dollar, and get a fixed APY on the purchase. So not only have we seen actual users interested in purchasing them, I'm not sure if any of you guys are familiar with the Olympus DAO. The Olympus DAO itself is interested in buying these bonds to tighten our collaboration with them and also to guarantee fixed returns to their users, which I think is just like super cool. And I'm excited to see how it all plays out. We're probably going to distribute the tokens or the bond tokens to our users in next week or the week after, and then shortly after, the yield space should be up for trading of the assets. I feel like I said bonds like 50 times right there.
It's fine. Zero coupon bonds. That's really cool. I think that whole fixed income space in DeFi is just destined to grow. It's certainly promising, and I think there's a short-term narrative in DeFi at the moment, but as it matures, I'm sure people will get more comfortable with holding longer duration securities.
100%. That's actually something we've been thinking a lot about in like the ideation about what does a Fuse 2.0 look like.
Yeah, I do have one more question. Phyllis is interested to know. I think he's just in a noisy area at the moment, so he can't ask. He's interested to know how does Rari deal with kind of failed liquidations in terms of, if a market starts falling with quite a lot of speed and the liquidators can't keep up with the liquidations. Is there any measure in place to kind of prevent that, or is that just something that wouldn't happen because of safeguards? Just interested to know.
Yeah, that's a great question. So we have a few different things. The risk score is holistically based on, or like one of the biggest variables in the risk score is the liquidity of the underlying asset. So we try and make sure that liquidations can happen as easily as possible. And what we've been trying to spend a lot of time on over the past few months is building out a pretty sophisticated liquidator infrastructure, working with all of the major liquidators who are on a compound and all of these other projects to come and start liquidating assets on top of Fuse. So we've seen one instance of failed liquidations, and that happened on the third day of Fuse's launch, and it actually happened with the SOX market. So we had to manually liquidate that market to make sure that it was healthy. We did so at a loss, but it maintained market healthiness. And since then, what we've done is we've actually brought in somebody named Samuel Shatterage, and what he's done is he's redone our risk score, and he's helped to refine all of the pool variables with all of the partners who run their own pool and also with our own DAO managed pool to make sure that they are as healthy as possible. So this risk score that you see on the screen right here, this is how it currently functions. We are doing a complete rewrite to place a lot more importance on liquidity. That's really all that we should be monitoring. But it's also an interesting problem for wrapped assets like Y vaults, where there is indirect liquidity, but you need to do that withdrawal first, and setting up liquidators to be able to do something like that. So overall, I think our liquidator ecosystem has become a lot stronger since we launched. There's a decent amount of liquidators who aren't us actively liquidating on top of the protocol, and how we'll deal with like drawdowns where we can't and where the market doesn't stay healthy is it's up to the pool creator to leverage their reserves because they can build in a reserve factor, or they can go and ask the DAO to reimburse them if it's such a large loss or if they feel that it's necessary for some reason, though the DAO has already proclaimed that they have no responsibility over the pools like that.
Well, thanks for expanding that. I can imagine you guys must have some seriously sophisticated liquidator bots compared to the rest out there if it's going to have to go through all these atomic transactions, like getting out of vaults and those kind of things.
It's a lot of fun to deal with that.
Yeah, I can imagine. I think those are pretty much all the questions I had. But you've answered them phenomenally. Thank you, Jai.
Thank you.
Go for it.
Rari at all, and so this has been a really great meeting for me to kind of learn and get a better point of view, and understand kind of what the protocol is about. And you spoke earlier about building tools for devs as more opposed to kind of building a tool for the community. And so I've got kind of a unique relationship here between a lot of the projects, as you probably know, YAM is kind of tightly aligned with the UMA, and I've been trying to work with both projects, honestly. But I wanted to see. I don't want to derail the entire thing, but I wanted to find out if like what kind of challenges you've had, like what you found like in marketing tools to more towards developers than towards like an actual community, and has like Rari been working on any like similar collaborations, partnerships, relationships with other kind of what I guess you would call sister projects, or can you speak to that just a little bit?
Yeah, definitely. So I think that there's two aspects to this. The first is Nova, which is a development product, right? It's a product that other projects are going to build on top of so that they can support L1 from L2 environments. This we haven't really started, right? The project is still under audit by Open Zeppelin, and we should probably start doing BD on it in the next few weeks. What we have done is we've gone and talked to all of the big, like all of our friends basically, and throughout DeFi, who we think would most benefit from being able to access liquidity pools from different layers. So that I can't speak too much about. But what I can speak more about is DAO to DAO relationships and how we're going about doing that. So on this Fuse pool page, for example, you can see a few different partnerships being done. You see a Fraxen Reflexer, you see Tetranode's Flavor of the Month, which is actually being basically Faye just took it over and they're going to infuse it with $10 million starting, I think, either today or tomorrow. And there are a few different other partnerships, but how we go about doing these is pretty easy, right? You start on Twitter, you say, hey, at Faye team, let's do this. And you tell them why, right? And you make it clear what the value is that you're going to be bringing to them. For example, we were the first project to support borrowing and lending of the Faye and Tribe assets, and we actually came out with this 24 hours after they launched. Being able to quickly iterate on that and see the value that we brought, it obviously caught the attention of the Faye team, and suddenly they wanted to work with us. And now, after weeks of working with them pretty closely on how we can best develop this, they've taken over this pool and they're about to infuse it with $10 million. So the best thing I can say, and from my experience, is just develop close relationships with the project and be upfront about the value that you're going to bring to them, right? Everybody's super busy in DeFi. They have 1,000 different things going on on top of their plate. But if you can go to them and tell them, hey, here's why you should listen to me, and you tell them we've already offered the first borrowing and lending place for Faye, and we're gonna make it the best place to borrow and lend all of these assets, then suddenly they'll be interested in working with you over a long term. And that's what we've noticed in all of our partnerships, whether it be Faye, Reflexer, or even just in interacting with like Tetranode and Chainlink God.
Yeah, no, that makes a lot of sense. I think that I've been kind of approaching it from like a different point of view and like approaching like the community aspect of it. But it does, what you said about like bridging DAOs and in communities as well makes a lot of sense. And I think that that's really where like, the strongest projects get their base from is their communities. So I really appreciate the insight there, and I appreciate the time you took today. And it's going to get me. I'm going to take some time to look more into what Rari's doing. And so thanks. I appreciate it, guys.
Thank you.
Hey, Jay. No, Tom, you get to go. All you.
Yeah, this is something I've spent a lot of time ideating about, yet have no concrete plan. But what I do have is a few like principles that I think will that lead to successful token projects, right? The few of those that just come to mind off the top of my head are: I believe long-term inflation is extremely healthy to an ecosystem. I think that it flushes out a lot of the dead weight and forces everybody to maintain an active participation. I think that is unfortunately a fairly controversial opinion, probably just because of Bitcoin. But I really believe that it's healthy, especially for these DeFi projects to have a healthy model for long-term inflation. One thing that I actually explored for quite a while at Rari was if we could tie the amount that we inflated the asset to the amount that or to the TVL of the project. So as revenues would go up, there would be a buyback, and it would offset the new inflation, and it would create more tokens, but those tokens would be accumulated by the DAO through a buyback. I just thought that was a really cool model. I'm not sure if we'll end up implementing it, and like we mapped it all out, simulated it. I just want more experimentation in terms of inflation. I think just doing a static 2% per year, like most projects do, or a static 5%, or whatever it is. I just think static inflation is really boring. And in DeFi, there's a lot of room for a lot more innovation and a lot more cool things that can be done. In terms of other things that I like to see in tokens is I think that a lot of these tokens that are giving yields upfront, right, just passing on dividends essentially to their stakers, I don't think that's a good model, right? I think that a lot of these projects should be reinvesting in their growth. Maybe they aren't because they don't, like, they've taken on VC money. They don't need the money, right? A project like Rari Capital, we've never taken VC money. We did a fair launch. We genuinely believe that we need to take every single dollar and reinvest that back into growth. And I mean, you get to a certain scale and maybe it doesn't make sense, but I have ideas, and I think that a lot of these projects could be better using their capital sheets and actually better deploying that capital than just giving it back as short-term dividends. And then the last thing that I'll leave it with is I think that tokens are a fundamentally like underexplored design space outside of the tokenomics itself. And what I mean by that is I think that tokens are a powerful financial tool, but they're an even more powerful tool when it comes to other things. Those other things include organization of individuals, right? Like not many people have actually like dived deep into the DAO model and really cracked it in a proper way. And this is something that we're actively exploring and trying to work on, but the token underlies all of that. And second thing is even in just community building, right? A token obviously shouldn't be 100% the reason that somebody lives and dies with the community, but it is a principle that will bring everybody together. And I just think tying the token into all of these other things, while sure that may have some risks, also represent significant opportunities that is massively underexplored by most projects. Thank you.
Yeah, very impressive. I have learned so much today, and really keen to dive even more and learn even more. We've taken up a lot of your time today, Jai. Does anyone have a quick question to end on, or is that enough for today? I think it's quite a lot. Cool. Yeah. So I really appreciate your time today. Really exciting to learn about everything that's going on in your thoughts on this space, and also it seems clear to me that there's a lot of ways we can learn from each other and move forward in YAM protection and liquidations, and there's so much stuff that we have alignment on. So really exciting to learn together.
100%. And let me know what we can do to get a YAMS pool up and running.
Yeah, absolutely. We'll be working together on that for sure. Really exciting because we are focusing on specifically this kind of type of farm, type of protocol.
Thank you, guys.
Yeah, so really appreciate it, guys. Jai, thank you so much. So, yep, next up, shall we move on, guys, to the announcement regarding YAM Synths? So anyone who doesn't know, YAM Synths is DGen V2, your portal to the infinite world of synthetics, and we're going to be launching with uPUNKS, giving complete exposure to the CryptoPunks market, everything from the floors to the alien punks. So it's a really great asset, and you can use it to hedge your existing punk exposure. You can earn UMA and YAM yield. So we are going to be doing some community testing, and there are some little gamifications here that I think is going to be really interesting for people to get involved and how we're going to reward people. So I'm going to hand over to Ross. Ross, do you like to talk a little bit more about exactly how the community testing is going to work?
Sure. Bruce, you want me to go first, right?
Oh yeah, go for it if you don't mind.
Cool.
I'll pass the screen over to you now.
Yep. All right. I think you guys should see Synths. If you don't, someone speak up. So we showed this before, but we've been working hard getting all the little issues fixed. There's still a few, and that's why we are starting with a community test of YamSynths. So after this meeting, we are going to be publishing the link, which actually you can see right here. But anyone who wants to get this link, we're going to post on Twitter, and then people can come in. We'll have a hidden channel, so you have to ask, and I'll explain a bit more about that. There'll be in the Yam Synths channel, you'll just have to respond with an emoji, and we'll get you a role that gets you access to test the site. So I'm just going to run you through. We got a beautiful new sort of splash page, super fun. Information all over. Okay, so come in. We still have our same two flagship products that we've had before, uGas, uStonks. uPUNKS is also available to mint and will soon have extra rewards from UMA. That should be starting on Monday. But right now, these are earning the normal rewards from UMA. And so using this interface is really very similar to using the older degen interface in that you access the same contracts. We just have given this a big facelift, and you can explore. This is going to grow out as we add more synths, which will be coming in the next few weeks. There's a portfolio page. I don't actually have anything minted in this wallet right now, but you'll be able to see all your positions. When you come in here, it'll show you graphs of what the price of the existing and the references.
Can I add something here?
Please.
Yeah, so go back to the graph. So this is something that really hasn't been done by any of the other UMA projects. So you see the difference in the reference price and what the synth is actually trading at. These are opportunities for you. Right now, you could short uGas and make money. So like this comparison has not really been shown. So I hope more people will trade these products, just seeing that like there's this very clear opportunity to make money here. So yeah.
Yeah, and so expiry for this is at the end of the month. So there is there's still a pretty big difference in this price. So you can mint and sell your uGas and then redeem back for hopefully more than what you put in. And then there's a whole new manage position page, which I'm not going to go through all of it right now, but we've worked through like testing out, trying to get this as simple as possible, so you can add it all. It should be a much better experience than the last than degenerative, and we hope that you guys in the community will be, if you have a position, you can manage it here and in going forward. And if you're interested in opening a position, we will have this link available, and you can play with it and test it and have fun with it. And if you see any issues, please let us know. It should all be working pretty smoothly, but there are always small little things that need to get ironed out. And then there's new docs that go over how it all works for people who are looking for more information on how this works. So we look forward to having everyone test, and after this meeting, I will make sure that all those links are up, and you guys can come in and get playing around with it. So I'm gonna stop sharing and hand it back over to Chillzone.
Thanks, Ross, for the very thorough dive into our new site, and thanks Indigo for the killer work building it. Is there any questions from the community regarding the UI or Cam Synthetics? If not, I'll move on to NFTs. So basically, we have a couple like NFT series that we're gonna be releasing soon to as like giveaways to the community. Here, this first series showing on the screen is a series of Yam Punk NFTs, obviously inspired by CryptoPunks. We'll be giving out these Yam NFTs weekly to users of Yam Synthetics. So whether you're a user of like uGas, uPUNKS, you'll be eligible to receive like these NFT airdrops, and this promotion will run pretty much like for the whole run of the uPUNKS contract. So the uPUNKS contract ends in September, end of September. So we'll be doing this NFT series release until then. And I think one thing we forgot to mention was that we're also doing a bonus like UMA rewards and Yam rewards like campaign for the uPUNKS launch. So when we launch uPUNKS next week, there'll be an additional 5,000 UMA rewards, UMA tokens given out to the community each week for 2 weeks. And then after that, 5,000 Yam distributed to the community as extra like minting and LPing rewards. So to get these rewards, you need to like mint a uPunk token and then LP it into our sushi pool. And then you'll be receiving like a prorated share of those extra bonus rewards. And also we'll be creating this other NFT series, basically inspired by the Superhuman campaign. Basically, anyone in the Yam Discord, anyone who is a superhuman in the UMA Discord, will be able to claim a special like pull-up badge, and this pull-up badge will enter you into like this raffle to earn these like unique like superhero NFTs. And these superhero characters will be like part of like a upcoming like fun animated series that we wanted to do with the UMA team. And we announced this 2 weeks ago, but I'll share it again here. We have a Yam museum in CryptoVoxels. You can check it out anytime at yam.museum. Basically, this will be like a space for you guys, for the community. We'll be doing a lot of community events in the future in the space. We're working with some different artists. We're trying to bring them in to showcase them for special exhibitions. And we also wanted to do like some special events like centered around like key moments in DeFi coming up, like the 1559 burn. We might do like a burn watch party or something. So take a look anytime you want at yam.museum. And for the pull-up badges, thanks for being on this phone call. We're giving out these pull-up badges to all of you guys for being part of it. You can just DM our pull-up bot on our Discord server, the secret password pizza party, all lowercase, one word, pizza party. Just DM the pull-up bot and claim this pull-up badge. If you have any trouble with it, just message me on Discord and I'll hook you up too. Are there any questions?
Where does one find that POAP bot?
Oh yeah. If you go to general, I'll tag him right now. Yep, Indigo just tagged him. POAP bot.
Awesome. Very excited to get these out. I particularly love the Yam Punks. They are so cool. Just a note, guys, we do now have the tip bot up and running. So we have a budget to share with small time contributors. So this could be something as simple as testing, guys. If you want to get involved and spend some time and provide some feedback, we'll definitely be tipping Yam to people. Translations, anything you want to do on a small scale to get involved in the DAO, and yeah, we're looking to reward people's time. So make sure to get involved, and of course you will be entered for these special NFTs as well. So yeah, very cool. I'm very excited to explore the next call in the metaverse, in the gallery, and get these exhibitions up and going. Very exciting stuff. So does anyone have any further questions about any of what was just covered, about Rari or anything at all? Awesome. I think that covers it for this week, and stay tuned for full announcements regarding testing and the Yam Synths launch. That will be coming very shortly. Thank you again to Jai for coming over, and yeah, see you all guys in 2 weeks.